Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the power shares, ticker symbol QQQ, which is the ETF that basically represents the Nasdaq market. And I've left my lines on the chart from last week's report so you can see exactly how the forecast panned out. Last week what I did is I extended my forecast line right here. This is the diagonal line that I drew from last Friday. And you can see that this is Friday. That's Friday's candle when the market report went out. And I extended this line in an upward direction, signaling that the market would most likely move higher. And we actually came to my target price on Wednesday. This is Thursday with that long shadow underneath that candle right there. And today we're closing with another green candle. So what does this mean for next week? Well, what I'm going to do is leave these lines in place, and I'm going to draw my forecast for next week, which I believe will move the market a little bit higher. This candle right here, as I mentioned, with that long shadow underneath the candle, that tells us that the buyers are moving into the market. So I think we're going to see a continuation of these green candles moving into next week. So that's a forecast for the Qs. If I look at the spiders, which is the S&P 500 ETF, ticker symbol SPY, you'll see again I extended my lines up from the previous week's report. And I said we would move higher. We did that early in the week. And look right here, we have another long shadowed candle on fairly high volume. So again, that tells us that the buyers are fighting back against the selling pressure. So I think this will also result in higher prices next week. And I'm just going to extend that out there just like that as it follows this 20-period moving average. Now I'm going to hop to the VIX right away because the VIX and the S&P are inversely related, and I want you to see how the VIX panned out with regard to the forecast. And as I zoom in, you'll see again my forecast was that we would bounce off of the support level. We did that perfectly, and on Monday we have a bullish engulfing pattern here that resulted in a higher VIX, and I said we would move higher to test this target level right there, which is the horizontal line that I've had in place now for a couple of weeks. So the VIX moved perfectly like I said it would, and the S&P again is inversely related to that. Now what I'm going to do here is I'm going to erase the VIX forecast from last week so that I can draw a line lower. I think the VIX is going to drop next week a little bit. I don't think it's going to drop below that support level. I think that will hold. But I think the VIX will drop because that's a doji, and we see the pullback from this resistance point. So if the VIX is expected to drop, then that will most likely result in higher prices for the S&P, which I've already forecasted higher. Now, if we take a look at the Russell 2000, you'll see that the forecast did not pan out as well as the Qs and the spiders did. In fact, it didn't rally at all. We had a bearish engulfing pattern here on Tuesday, but the good sign for the Russell 2000 is this long shadow right here. That again, like the Qs, tells us that the buyers are moving into the market. And so what I'm expecting for the Russell 2000 is a move back up to the 20-period moving average right there. So we'll get rid of that forecast line and leave this one in place for next week. Again, the 20-period moving average is going to act as resistance now. So I'm going to put that as a target with the highs from back here in October remaining on the chart as a secondary resistance point. Now, finally, if we look at the diamonds, you'll see that we did have a little bit of a rally early in the week as I forecasted, but the volume dropped on Wednesday, and then so did the price action. It followed the volume drop, and that told us that the buyers were starting to lose some steam midweek. I'm going to move this line over to the right to forecast that we're going to move a little bit higher next week. Again, I don't think we're going to storm up with the diamonds, but again, we're seeing these long shadows under the market right here telling us, and that's with the Qs, the spiders, the Russell 2000, these long shadows tell us that the buyers are starting to move in. So that's going to be the forecast for the diamonds next week. Now, if you're interested in following along with the Market Guys, just go to themarketguys.com. Click on the video tab right there. That'll bring you to the video library. Each one of these videos are called Market Shots, and that'll give you a 6 to 8 minute lesson on what we're talking about here, especially when it comes to support and resistance and some of the other things that you need to know for reading the technical charts, especially the role reversal right here. When resistance is broken, that former resistance turns into new support, and vice versa. When support is broken, the former support turns into resistance. So it's a valuable lesson right there that'll only take you, again, about 6 to 8 minutes to get through that video. So I want to thank you once again for joining the Market Guys. Stay tuned each and every week as we deliver the weekly market reports, and you have a great weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.